Hello, welcome traders. Welcome to AlBashir FX. Welcome to this page. And um, as you all know, this is our daily forex forecast, and we analyze the XY, Euro, GBP, and Bitcoin itself. So if you are here to know, you understand your directional bias, and also these videos offer a little form of teaching to help you determine the market bias and all of that. So just keep up, and if this is your first time stumbling on this page, please do subscribe, like, and comment on this video to help the algorithm push my videos to more people. Thank you so much as you are willing to support my growth on this journey. So let's go to the chart, and I will definitely start from my US dollar. And we've seen how price delivered today. Let's just dive into the real deal, right? We've seen how price delivered from here all the way down. We called out these Monday candles, and the Tuesday I didn't call out to be like this. I wanted Tuesday to have a bullish close, right, which is going to indicate higher prices. Because this why when price was here, we are looking for an internal to external what delivery. We're looking for price to leave from internal to external. But I also did not forget the fact that you should not forget the fact that we have our candle range. Now I'm going to leave the week, right, because of this large wick here. That's why I'm going to leave the week. So you should not also forget that if you use the bodies of this candle, we have our 50% here. We have not even traded to the 50%, talk more of the 61%. But with the market structure, since the higher time frame institutional order flow, the monthly is bearish for the DXY, but on a weekly time frame, we've seen um a rejection, which shows a bearish institutional order flows. And this when, for example, when we have a bullish monthly institutional order flow, but we have a weekly bearish institutional order flow, and now on the daily time frame we are now having what, a bearish institutional order flow. And on the lower time frame, like the 4 hour, 1 hour, and 15 minutes, which is our execution time frame, we also have a bearish institutional order flows. So which institutional order flow is not in align with our perspective? It is the weekly. And so we need to be very careful, because this time around we can see price takes people out. And also don't forget the fact that we are getting close to the end of the month. Just like we all know that during the daily time frame, we want the market to open. If we are expecting a bullish day, we want the market to open, go lower, tap on a key level, then go higher and close above. Now same things happen on the monthly. Now we are close to the monthly closing. We are very close to the monthly closing hours, and we might remain on this specific range which I've just marked out for you to get a comprehensive understanding, for you to know the narrative. This is what I'm just explaining, is the narrative behind this price delivery. So we've seen that price has already delivered bearish, but did not support what we intend to see if price is actually bullish. Now, if we are actually bullish, we have to have this week that we have up here is supposed to be down and a close above, which we show that we have a close, or we did not have a close below. Now we have a close below, right, indicating lower prices, right? So tomorrow, currently tomorrow I am neutral, right? That is, I will come during the London session and seek for whatever price presents, and also I will go in during the New York session and I will seek for whatever price presents, right? If we are bearish, then price should remain before the London session, price should still remain close to the daily low, all right, the which is previous day low, and during the London session, which is the New York opening time, opening hours, sorry, then we can expect price to rally higher before going lower. Let me not just dive into explaining all of this. Maybe I might do a video on the power of three. So in case you want to know when the video is live, you can subscribe and turn on the notification button so that you can get an update whenever I post any content like this. So I don't edit my content just like you've seen it. So my content is raw, clean, and the way it is. I don't try to outshine it so that the maybe you will get hooked and you will like the color and all of this that people do. No, my content is just natural, just trying to share my own ideas based on my own experience and what I have learned. So I use ICT concept, as you all know. So let's continue by going to the lower time frame, which is the 4 hour time frame, right? So on the 4 hour time frame, we have we have our fair, which is this is our daily fair value gap, which has been tapped into today, and price is still going lower. And we look how we close today, and this current 4 hourly fair value gap, 4 hourly candle have a close below. What does that mean? Lower prices. We have a down close here, creating a fair value gap. And when market is having a this kind of expansion, which is also indicating what more lower prices, this one we close below, more lower prices. And now we never have any candle that has a close above on the 4 hourly time frame. This is something you need to pay attention to. On the 4 hour time frame, we haven't had any candle that has a close above. So all the candles that we have here is close below, close below, close below, indicating what more lower prices. So now what I'm anticipating for, if actually we are going to go lower, then the which is the okay, the 12 o'clock a.m., the candle that is going to print around this area, the 12 o'clock candle a.m. should be a close below, and that means we are bullish, sorry, we are bearish for the DXY. But since I told you guys I am neutral, let me tell you where the areas I am looking at price to react when it gets there. We have a fair value gap that has been tapped before, and price can still use it again as what, as price can still use it again as element to the trade, which is H4 inversion fair value gap, sorry, not inversion, H4 fair value gap, which is a 4 hourly fair value gap. That is what I mean by H4, just in case you don't know. So we have a 4 hour fair value gap here, and if price delivered below here, then all the way down to this level, then this should be the key level that supports higher prices. Otherwise, we are going to continue to see lower prices. And then if we break below this 4 hour fair value gap, which is also telling us that what the institutional order flow for the weekly might have turned might have turned bearish for the dollar. So this is mainly the perspective that we have tomorrow. And again, on the hourly time frame, now we have what we call a bullish order block, and this bullish order block was the one that delivered price all the way from this level, right? So which makes a logical conclusion that price will react off of it. Even though price did not use it to come all the way higher, it might use it to seek for this buy side, this smaller time frame buy side liquidity, or this hourly swing highs around here. So before we reject and go lower, but for the meantime, this is the main area we have. So if today I was not really stationed on my charts just like I normally do, because I have some um, life issues that come within my today trading hours. So but I did not pay much attention. But yeah, what do we see here is that we have a high, a swing high that created a swing low, and we have a fair value gap, which something I'm supposed to, on a normal circumstances, I'm supposed to pay attention to, right? And understand the narrative. So we have this high and low, a break below, and we have a retracement, which was a good trade. And this trade, this high occur at what, the 3 a.m. London session. So this is a London session, but mm, overall we can see that the market has been on a range, right? There is no profitable trade here, to be honest, right? So even if you are going to use this to trade lower, we still don't have a profitable trade around this area. So today was ranging all day. I don't know why, but majorly because of the Powell speech. It did not come out at, I don't know, it did not come out as expected. So, and price did not react much onto the news even after the break of the news. But now we still are that this fair value gap has support price to continue to go lower, right? So we seen that the market is going lower, and the only logical conclusion is that if market is going to continue to become bullish, it should react and respect this other block. Now, what I'm anticipating is that the New York session for tomorrow on the dollar index should, if we are bullish, right, we should tap on this area, reject, take the liquidity, then use this area to go higher, right? We might not get all the way to this external range liquidity, which is the, yeah, the weekly, sorry, the daily time frame external range liquidity, a draw on liquidity. We might not really get there, but price should react to it like this, and we should get here before London, right? We should get all the way to this level before London, because with this, with the current, with the way price delivered today, which during New York, this is London price delivery. Sorry, this is Asian price delivery. This high that created this low, that created this fair value gap, it is the Asian session delivery. The Asian delivered all this expansion. Now, because the New York and the London has delivered a consolidation, right? There is higher probability that if the market opens today, the Asian session, which is this midnight session before tomorrow morning, in Nigerian time, right, before tomorrow morning, will deliver extensively lower, right? It will not consolidate as well. It will continue to go lower because we have already have enough consolidation, two sessions that consolidate. So this is majorly for the DXY, and why we always analyze DXY like this is to let you guys know what is the highest probability price is going to do next, right? Because if you understand the XY, then you don't have to stress more. Just like I am anticipating for the price to continue to go higher, just like I've said. All right, then if price is going to go as we called out, my network just had issue, right? So sorry for the inconvenience, you guys. All right, so if the XY is going to consolidate before going lower or continue to go lower to go higher, then we should also expect the EU to go higher then go lower. So let's go to EU and compare with the XY analysis and see what we have. So let's start from the higher time frame. All right, so according to the EU, EU is showing complete bullishness, right? We have a complete confirmation. We have an up close candle indicating higher prices, and also today has an up close candle indicating more of what, higher prices, right? But the weekly institutional order flows still has not changed yet, so we need to also pay attention to that criteria, and we should not lose track of what we are actually doing, right? And again, we know that this down is a down close, what is a can is a read on liquidity, right? This is a read on liquidity, and price has shown momentum lower, and now we are retracing, right? How far can we retrace? We don't know yet, but if we are going to be bullish tomorrow, my highest expansion for tomorrow should be this particular Thursday, 18 September 2025 candle, to be the buy side liquidity where price is going to seek for, which is my highest expansion or an external range liquidity price is going to use. And again, if the EU is going to be bullish tomorrow, then we should see this inversion fair value gap used, because on the DXY, the fair value gap hasn't formed an inversion fair value gap yet compared to the EU. But know that the dollar index have more strength than EU. We use the dollar index to get more complete confirmation before using the EU. So despite that EU has turned this to inversion fair value gap, does not mean that the XY will now start going lower and EU will start going higher. If the SY is going to continue its bullish move, then the euro will continue to get bearish. But aside all of that criteria, we have seen that this is a very good inversion fair value gap to support higher prices, and our highest expansion should be this candle high, right? You can go to your chart. The Thursday previous week candle high should be your highest expansion. Well, this is the narrative for the daily time frame on EU. So let's go to the 4 hourly time frame. So on the 4 hour, we've seen that price has we see how, sorry, we've seen how price rally within this range, right? We also have a mini fair value gap here, which the body of the candle did not close below it, right? So we close above it, which makes this smaller fair value gap. Just go to your chart. I did not put that on my chart, but it's here. But since it is inside of the daily inversion fair value gap, that is why I did not add it. And we've seen that we have a fair value gap, just like we have a 4 hour fair value gap, just like we have on the DXY. So if price is going to be bearish, then price should react on that and go lower. All right. And also, before I go to the hourly time frame to show you the smaller time frame on mitigated key level, right, unused key level, right? But we also look down here, we have a fair value gap, which we don't know yet price is going to get here, and we have this particular previous day high that has not been used. So let's go lower, right? This is what I am saying, that if we measure this particular low and measure this high, right? I did take a loss today, right? I take a loss if you're in my community, but the loss I did take was on during the London session. I was looking for lower prices around this area, but forgotten the narrative that we actually, right? I was anticipating for lower prices, and also forgot that same price has not gotten to our lower time frame mitigation level, which is this 1 hour bearish order block. So if I should consider the 1 hour bearish order block, then I should have already seen this. And to tell you something is that the fact that a trader, we know, we wake up, this thing is becoming so boring, right? We woke up every day, go into the market, take a trade, and knowing fully well that we don't follow our rule completely sometimes can really hurt us, just like what happens today, right? Although I didn't see my rules completely and I still take the shot because I see the candle was having a down close, a close below, and I didn't wait for it to even fully close before I take an entry. So it did not fully close, then I take an entry, and it went up and closed, and later not have um, a close below, so which is very very bad. And again, I did not pay attention to this. See, look at a very good, a swing low, a swing high. We get to the premium, and now it's taking us to what? Well, we get to the discount, and now it's taking us to the premium. But even if you take this trade, right, don't lie to yourself. Even if you take this trade, all right, it's still a risk on, because we haven't even getting to this high already, high yet. And my one of my rule again is that if I take the new London session, I enter London within my London entry should occur within 2 o'clock a.m. to all the way to 5 o'clock a.m. Right, this particular swing high, let me now take this out. Right, at least it should take you three, no matter how delayed the price is, it should take you three hours to deliver. And most of the time, my time frame, my trade used to deliver. If market is moving perfectly, my trade used to deliver within an hour. All right, within the session, that session trading. So we see that this high was the actually the where I will close my trade and be waiting and be preparing, looking at the chart, thinking where the New York session will react. Don't take this as only a day trading video, also take it as a tutorial video, because by the time you are acquainted with all this understanding, basic understanding, then it can also help you when you are doing your analysis, what to look out for. Right, so it is time for us to look for a higher prices, right? So when we are looking for when we are looking for higher prices, we want to see a continuous what, up close candles, that is having a close above previous candles. So we have seen that the euro US dollar rallied just the way the XY rallied, and we haven't taken this internal range liquidity, and we have bearish order block around this area, and we have a fair value gap around this area. We have a very fair value gap around this area. So these two remain our optimum key levels, and if price did not respect these optimum key levels, which is also a premium higher time frame premium key levels, if price did not respect it, that is the only and the last key levels that support bearish move. So if that did not hold, then we are going to continue to see higher prices going in next tomorrow. But on a serious note, I don't have a complete bias. I'm not that means I'm not saying that the EU is going to be bullish or the EU is going to be bearish, but I am neutral. Only if we are going to be bearish tomorrow, just like I've explained on the dollar, we are going to see the Asian session take us all the way to this level, right? Breaks below, taps on the levels, then take us below, right? So this is the most logical price move, price swing for the Asian, right? Asian should take us all the way to this level, then London will takes us from there, then New York will retrace to the London, then we continue. Just if you understand your power of three, right, you should understand. So that is just it. You can ask your question and I'll be very thrilling to answer your question. So let's go to GBP. We really do not have much on GBP. Give me time. Just give me 2 seconds. Sorry guys for that. So on the GBP, we have seen that yeah, it occur as we called out yesterday, but I was also calling GBP to retrace, not to have a down close candle, and we see that GBP has an up close candle that is a close above, and also we haven't getting to the bearish order block. So what's this here? Let me take this out. Well, it's a liquidity sweep. Let me just leave it. So so we can see that we can see that the GBP is also showing higher prices. But how far can we go? Is this fair value gap, this untapped fair value gap, and also the bearish order block, which is my highest trail for DX for GBP, or cable as some of you called it. So we've seen that GBP is disrespecting this particular fair value gap. And also note something: when we have one fair value gap, more than one fair value gap, we have one and two. We take the one that is above, right? We don't take the one that is very close to us. price is more likely to go for the one that is above, that is far away. So if price is going to use this fair value gap, then it is going to respect, it should respect this fair this bearish order block and the internal range liquidity as well. And we see that today price both on GBP was ranging and nothing much happened. So this is just an overview. Like I sometimes I'm sorry guys if you are the type that trade London session, sorry, if you are the type that trade that they trade GBP. I really did not do not day trade GBP, and that is why sometimes I find it difficult explaining it extensively, because I spend most of my time on EU trying to look out for what is the highest best possible opportunities, right? And also not overwhelming my analysis. So we have seen how, you see, on a lower time frame we see how price structure is today. Just seek and destroy on GBP. We really did not have any clean move, but yeah, some people that are smarter than me can still see something here, right? So don't always think because you cannot see something, right, somebody cannot see. You might be on a losing trade and somebody, maybe you buy a trade and the trade is going on a loss, and you still see another person that buy on that same trade and the trade is going on a profit. You'll be wondering how come this is happening, but in trading it does happen. It just means your level where you buy matters the most. So that's the fair value gap I just added is the 1 hour fair value gap that was tapped during 4 o'clock a.m. on GBP before price swing. And also the news we have today was Jerome Powell, and even the EU and the GBP also have smaller time frame news, but which is I've forgotten. But and something I really done today is I forgot to check my news event before going into the market. If I know Jerome Powell was gonna speak today, I wasn't going to put much of my energy on the chart, to be honest, right? Because if Jerome Powell is going to speak in the evening, which is the afternoon session, the PM session for New York, we are likely to see that London session and New York morning session will be ranging. Then after Jerome Powell's speech, before the London New York PM session begins to deliver fast. So this video is for the traders, but the trading is not all everyday trading. Just understand this and you will know that word, as it's as simple as it is said, but it's very very hard. Sometimes I find myself looking for trade by all means, right? Because I could not afford not to take a trade that day because I call myself a day trader. But sometimes after the week when I back test, and I'll find out that some days they were not even a good trade, and those are the days I took loss. And the days that I might have a good trade, I might have a miss entry. So I'm still struggling with some things. I'm not perfect yet, so I'm building up, and I hope we can build up together. So this is the Bitcoin or BTC USDT. I'm using by Bitcoin USDT perpetual contract Binance. So we've seen that price has delivered lower, and I was telling you guys this is our bearish order block, which is also our market, uh, our shift in market structure or market structure shift. So, and it's also representing our bearish order block, and now we have a fair value gap. Let me take this out, although, or let me just shift it, right? So, and also we have a fair value gap now. And what do we have here? We didn't have a close below, we have a close, we didn't have a close below, we have a close that is above, or be that is above the previous day low, which indicates price is going to come all the way back to this fair value gap, and perhaps we might see a retest on this bearish order block before we actually move lower. So this is majorly what I'm looking at from Bitcoin, because yeah, Bitcoin also have a nice blueprint that the price is going to go lower, but you need to have patience to see this thing unfold. If you don't have patience, you might go in and destroy your account, because that is the highest thing a trader can do to themselves. by not being patient. Even on a lower time frame, we can see clearly that even Bitcoin was ranging today. So there's so many things that the market was doing today that is just so constant and it's not really showing any effectiveness. But anyway, we are still having right. We are still having a a, an understanding of what price is doing. Just that it does not give us any opportunity today. So because it does not give any opportunity, it doesn't mean that price did not do something. So we see this is the hourly time frame and nothing really much to say about it. Our bearish order block, our 1 hour order block still remain intact, and our higher, which is our daily bearish order block and market social shift, still remain intact. So this is majorly the market review for today, and I hope I really did something well for you. And if you think I did help you in one or ways together in understanding the market bias, please do subscribe to this channel. I think God beg you subscribe to this channel and make a comment. All right, and share these videos to more traders. Thank you so much as you help me on this my journey. God bless.